95% of Bitcoin holders lose money. Not because they're stupid, not because Bitcoin failed, but because from the very first moment, they entered Bitcoin with the wrong mindset. Most people don't come to Bitcoin to protect their wealth or to build a long-term financial future. They come for a very familiar dream: getting rich fast. They see Bitcoin as a digital lottery ticket. They want X10, X50, X100 in a short time. And when the market doesn't move the way they expect, they panic, they lose patience, and they sell at the worst possible moment. Bitcoin was never created to make you rich quickly. It was created to protect you from a monetary system that is designed to lose value over time. In many high-inflation countries, Bitcoin is not speculation. It's a survival tool. But for most investors, especially in relatively stable economies, they've never truly understood this. And when you don't understand why Bitcoin exists, you'll never know when to hold it. The next mistake appears almost immediately: obsessing over Bitcoin's price in USD. Every day, checking your phone, staring at charts, reading headlines. Bitcoin goes up, you're happy. Bitcoin goes down, you're scared. But the USD itself loses purchasing power every year. You're using a weak measuring stick to judge the strongest asset ever created. Professional investors don't ask, how many dollars is Bitcoin today? They ask, over time, am I owning more Bitcoin or not? Then ego starts to take control. People try to time the perfect bottom. They wait for confirmation. They wait for a lower price. And the result is, they wait forever. The truth is, the bottom is only obvious after it's already passed. Dollar cost averaging, buying consistently, has no glamour, nothing to brag about, but it beats almost every emotion-driven strategy. Yet even those who do buy Bitcoin often make another fatal mistake: lack of consistency. They buy once, then stop. They say, I'll buy more when there's a better opportunity. And that better opportunity never comes. Building wealth with Bitcoin is like going to the gym. It's not one workout that defines your body. It's whether you keep showing up consistently. And this is where 95% of people start to slide downhill. Over trading. Trying to outsmart the market. Chasing excitement instead of building real value. Bitcoin does not reward adrenaline. It rewards discipline, understanding, and time. If you're watching this video, the question isn't whether Bitcoin is worth holding. The question is, are you approaching Bitcoin like an investor or like a gambler? When you enter Bitcoin with the wrong mindset, every decision that follows becomes distorted. And the next mistake I see repeated year after year is the attempt to be smarter than the market. So many people believe they'll buy Bitcoin at the absolute bottom. They wait. They watch. They wait for even worse news. But the truth is, the market doesn't wait for anyone. The bottom only becomes obvious once it's already behind us. And those who wait for confirmation are usually the ones who buy the latest, or never buy at all. That's why dollar cost averaging always defeats ego. Buying consistently means you don't need to time the market or beat it. You just need to show up. And in personal finance in the United States, consistent participation matters far more than how much money you put in each time. But even after buying Bitcoin, most people continue to make mistakes because they lack consistency. They buy once, then stop. They wait for a better opportunity. In reality, the people who succeed with Bitcoin aren't the ones who buy the most in a single day, but the ones who never quit. $50 a week, quietly and consistently, often beats $5,000 invested emotionally. Then, when the market starts to move, emotions take over. People begin trading. They buy, sell, buy again, sell again. They believe they're being active. In reality, they're turning Bitcoin into a roulette table. Fees, spreads, and taxes quietly eat away at their accounts, while they reassure themselves that they're learning. Wall Street has proven this for decades. 95% of short-term traders lose money. Bitcoin is no exception. Great wealth is not built on adrenaline. It's built on patience. When prices rise, another mistake appears: trying to time the top. Many people sell Bitcoin just to prove that they're smart. But market tops usually exist for only a brief moment. And after selling, they no longer have the courage to buy back in as the price keeps rising. They become spectators to the very opportunity they once held. On the other side, when prices fall, fear takes control. Many people sell too early, after Bitcoin has already gone up 5 or 10 times. They think they've won. But Bitcoin's history shows that the biggest rewards always go to the most patient. Bitcoin has been declared dead hundreds of times, yet it's still here. Then there are mistakes that don't come from the market, but from structure. Leaving Bitcoin on exchanges. Trusting institutions once labeled reputable. When things collapse, people learn a very expensive lesson. If you don't control the private keys, you don't own the Bitcoin. At the same time, boredom sets in. Bitcoin moves sideways. The excitement disappears. And so many people leave Bitcoin to chase altcoins, chasing promises of X100 or X1000. History shows that most of those coins eventually disappear. Bitcoin, with its decentralization and ability to survive multiple cycles, remains standing. Another quiet mistake is ignoring fees and taxes. In the United States, profits that aren't tax-optimized were never truly yours. The more you trade, the more you lose. But most people only realize this after they've already paid the price. Finally, there are those who buy Bitcoin aggressively but have no plan to sell. No rules. No scenarios. They sell based on emotions, news, and crowd behavior. Professional investors do the opposite. They define their selling rules before they ever place a buy order. Some people make an even more serious mistake, investing money they can't afford to lose. When financial pressure appears, they're forced to sell at a loss, not because Bitcoin was wrong, but because they weren't prepared. And all of this leads to the biggest mistake of all, not truly understanding Bitcoin. Listening to KOLs, Twitter, TikTok instead of doing their own research. Not understanding why Bitcoin was created, or its role in the global financial system. When you don't understand Bitcoin's history and fundamentals, you'll always react to price. When you do understand it, price is just noise. What's worth noting is this. Most Bitcoin mistakes don't come from a lack of information, but from people being unable to handle their own emotions. Bitcoin is a financial mirror. It exposes greed when prices rise. And it exposes fear when prices fall. In the United States, I've seen many highly educated people with strong incomes, even those working in finance, still lose money with Bitcoin. Not because they don't understand investing, but because they underestimate the power of emotion in a market that's open 24/7 and has no off switch. When you check Bitcoin's price every hour, every day, your brain is trained to react instead of think. You stop making decisions based on long-term strategy and start acting on immediate feelings. And that's when the worst decisions are made. One mistake very few people recognize is failing to build rules for themselves. No rules for buying. No rules for holding. No rules for selling. Without rules, you borrow the crowd's emotions to make decisions. When the crowd is excited, you buy. When the crowd panics, you sell. And the result is always the same. Buying high and selling low. The successful Bitcoin investors in the US that I've worked with all share one thing in common. They reduce the number of decisions they have to make. They automate their buying. They limit how often they check prices. And they only act when something is truly strategic, not emotional. Another very common but rarely discussed mistake is underestimating time. People want fast results, yet they're holding an asset designed for the long term. Bitcoin does not reward impatience. It rewards time and patience. In finance, time isn't just a factor. It's a weapon. Then, when Bitcoin doesn't rise fast enough to excite them, many start doubting their own decisions. They compare Bitcoin to other get-rich-quick stories. They feel like they're missing out. But most of those stories either disappear or leave behind very expensive lessons. Bitcoin doesn't need blind faith. It needs you to understand it deeply enough not to betray yourself. Another reality many people fail to anticipate. Bitcoin isn't suitable for everyone at every moment in life. If your life is under financial stress, if you need money in the short term, Bitcoin becomes a psychological burden. And that burden pushes you into bad decisions. That's why serious investors always separate their money. Living expenses, emergency funds, and long-term investments. Bitcoin should only sit where you can give it the time it needs to fulfill its role. Finally, there's a truth that's hard to accept but extremely important. Bitcoin is not easy to hold. Not technically. Psychologically, it forces you to face the fear of losing money, the fear of missing out, and the fear of going against the crowd. It makes you doubt yourself before you doubt the market. And at that point, Bitcoin begins to sort people. Not by income, not by degrees, but by emotional control, by understanding what they actually hold, and by the ability to stay patient when everything becomes boring. Bitcoin doesn't deceive anyone. It simply reflects how you think about money. There's something very few people say out loud. Bitcoin wasn't designed to make everyone rich. It was designed to eliminate those who lack patience. That's why the 95% loss rate isn't an accident. It's the natural outcome of how humans react to uncertainty. Most investors enter Bitcoin with an unconscious expectation. The market should reward me for having the courage to participate. But the market owes you nothing. Bitcoin certainly doesn't. It doesn't care whether you believe or not. It only responds to behavior. Those who lose money tend to ask the wrong questions. They ask, when will Bitcoin go up? They ask, did I buy the wrong thing? They ask, should I sell now? Meanwhile, those who endure ask entirely different questions. What is Bitcoin replacing? What problems does the current monetary system have? What role does Bitcoin play over the next 10 to 20 years? The difference isn't technical knowledge. It's the mental framework. Another mistake I often see among US investors is underestimating the power of boredom. When Bitcoin isn't rising, isn't crashing, and there's no sensational news, people feel like they're wasting time. And then they start doing something just to feel in control. But in long-term investing, doing nothing is sometimes the best decision. Not buying more out of FOMO. Not selling out of fear. Just continuing with the strategy you already set. Boredom is the filter. It removes those who came for emotion and keeps those who came for understanding. Bitcoin also exposes a deeper issue in modern personal finance. People aren't used to taking full responsibility. When you keep money in a bank, there's always someone in the middle. With Bitcoin, there is no intermediary. No one to blame. No one to call when you make a bad decision. For many, this is deeply uncomfortable. So they return to familiar systems, even while knowing those systems erode their purchasing power every year. Another critical point. Bitcoin forces you to think long-term in a world addicted to the short-term. Everything around you pushes instant reaction. News, social media, prices. Bitcoin does the opposite. It rewards only those who can delay gratification. That's why many intelligent people still lose. Not because they don't understand Bitcoin, but because they can't tolerate waiting. And here's something we need to say plainly. If you constantly doubt Bitcoin simply because the price hasn't validated your belief yet, the problem isn't Bitcoin. It's that you're seeking confirmation, not value. Bitcoin doesn't validate you every day. It tests you every day. And only those who make it through the phase of doubt, boredom, and psychological pressure begin to understand why Bitcoin has survived, grown, and returned stronger through multiple cycles. Not because of luck, but because it was built to outlast human emotion. So after everything we've just covered, the question is no longer whether Bitcoin is good or not. The real question is, how are you treating Bitcoin? The 95% who lose money don't lose because they chose the wrong asset. They lose because they entered Bitcoin with the wrong mindset, the wrong expectations, and the wrong behavior. They let emotions drive their decisions. They seek validation from price, from news, from the crowd. Meanwhile, the remaining 5% aren't more special. They don't have insider information. They don't time the market better than everyone else. They simply do one thing very differently. They understand what they hold. They don't try to catch the bottom. They don't obsess over selling the top. They don't trade to feel smart. They don't chase get-rich-quick promises. They accumulate consistently. They stay disciplined. They take full responsibility for their assets. And they give Bitcoin the one thing it needs most to work: time. Bitcoin doesn't reward blind faith. It rewards understanding. It doesn't reward impatience. It rewards the ability to go against the crowd when necessary. If you're watching this video and feel called out, that's a good sign. Because financial change doesn't start with price charts. It starts with the courage to examine how you think about money. Bitcoin doesn't care whether you believe in it or not. But your portfolio does. If you want to be in the remaining 5%, start with one simple action. Backhand index pointing right. Leave a comment. What do you think is the biggest mistake newcomers to Bitcoin are making right now? Backhand index pointing right. If this video helped you see Bitcoin more clearly, hit like so YouTube knows this content deserves to be shared. Backhand index pointing right. And if you want more honest financial analysis, no hype, no FOMO, subscribe to the channel and turn on notifications. Because in a world where money loses value every year, understanding money correctly is no longer an advantage. It's a necessity. See you in the next video.